Look, we think this is going to be a good quarter, and we might even get earnings growth close to that 25% number that we saw in the second quarter. And it's really being driven by strong fundamentals here in the U.S., as well as that tax reform package that we got at the end of last year, which is really boosting the bottom line. And then you've got a little bit of buybacks to support more bottom line growth.
Lindsey, what part of the market has to do really well this earnings season for it to be a positive narrative for the rest of the overall market? Is it technology? Is it consumer discretionary? Is it the financials? Where are you looking?
Well, I mean, ideally, we'd like to see broad-based success across the 11 sectors. We're going to see positive growth in all 11 sectors this quarter, which is a very good sign. The financials, they kicked off earnings season last week, and the results were good, and it was a reminder that the domestic fundamentals here in the U.S. are very strong. The consumer is still feeling very good, and so are corporations. The commentary you heard from some of these CEOs was very impressive. They've talked about how CapEx is still on the rise, the geopolitical China trade concerns really aren't impacting their business. It was just really Jamie Dimon that kind of sounded the warning about the risks that do remain in the market, which are related to higher interest rates and those geopolitical concerns. But overall, we got good numbers out of the banks. The regionals are going to be the area of concern that we need to watch this week. PNC reported they're kind of one of the best in breed within the regional space, and they kind of disappointed with guidance and their loan growth. So it didn't bode well for the other regionals that, like I said, we'll get this week. This is a battered group, and it would be nice to see them show some signs of life.
What exactly are you going to be looking for in terms of commentary? I know the forecasts are always going to be key. They're forward-looking. Is there anything thematically you can say about what we would be looking for in terms of those forecasts?
Yeah, I mean, this is going to be the first quarter where we really see the impact of tariffs, or at least hear about it and might be able to quantify it a little bit. And, you know, part of the recent pullback in the market has been related to that, because we did get some Q3 pre-announcements from industrial companies that pointed directly to China and the tariffs that are impacting their businesses. We're going to hear a lot more of that on earnings call this quarter. And that's kind of the question. That's going to impact guidance all year long. Like I said, the numbers have been going up. Revisions have been increasing to the positive side. It's all been great. But I think really this is going to be the quarter where the rubber hits the road, and we're going to see what corporate earnings are going to look like over the next quarter, and then, you know, maybe get some glimpses into what to expect for 2019 when the trade tariffs with China move from 10% to 25%.